nobody was ready for all of the mess that was thrown around today in the markets. We're going to get up to date, and I think it's fair to go in order. But the big news is that Israel and Iran announced a ceasefire coming up. So let's get up to date with everything going on. And let's start in order. Well, let's kind of just sit here real quick so we could get caught up. So it all started with Israel still striking Iran, but wanting to wrap it up. There's that want there. The UN's Atomic Agency chief said that the U.S. attacks on Iran's enrichment site in Fordow were expected to have caused very significant damage. There was just that expectation there. So I just thought it was interesting they added expected into that. Then everybody was kind of waiting to see how Iran would respond with a whether there was the everybody had the hope that de-escalation rather than escalation was the route everybody would lead on. And the supreme leader seemed to only focus his comments towards Israel rather than the US, saying that Israel had made a grave mistake. Although the Iranian military officials said that the U.S. actions made them a party of the war. They met with Russian President Vladimir Putin today, with Iran's foreign minister in Moscow, and it was said that the strikes by the U.S. weren't justified and that Russia was taking steps to help Iranian people and serve justice. So that all added into the mix of mess and more countries condemning the U.S. for the attacks. And that led to many questions about whether Trump's decision to attack Iran was constitutional, whether or not it complied with international law or not. And the day just kind of progressed and went from there. So now President Trump comes out and says Iran and Israel agreed to ceasefire. And remember, the verbiage here is interesting that he says ceasefire, because I remember just a couple days ago, ceasefire wasn't on the table. He wanted complete surrender of Iran. I don't know if this is that or if it's the same thing or what, but that's just the word they used here. And Iran warned Qatar before attacking, shooting at a U.S. military base in Qatar. And what it was seemed to be is kind of like, yeah, they're attacking, but they let us know everybody was evacuated and they were able to stop the missiles. So it's just kind of like a, hey, we're going to prove our point and we're going to do this. It's just kind of a show, but we don't really want the smoke. Israel continued to strike targets. So yeah. So we're all pretty caught up with that. And half a dozen ships have diverted course on the way to the Strait of Hormuz, the crucial waterway connecting the Persian Gulf to global markets since Sunday. So let's see what Trump was talking about today. So congratulations, world, it's time for peace. And then he made this long Truth Social post. Congratulations to everybody. It has been fully agreed between Israel and Iran that there will be a complete and total ceasefire in approximately 6 hours from now, when Israel and Iran have wound down and completed their in-progress final missions. What does that even mean? For 12 hours, at which point the war will be considered ended. Officially, Iran will start the ceasefire, and upon the 12th hour, Israel will start the ceasefire. So it kind of seems like they're going to do it in waves. Upon the 24th hour, and the official end to the 12-day war will be saluted by the world. During each ceasefire, the other side will remain peaceful and respectful, on the assumption that everything works as it should. Interesting. I kind of skimmed past this part yesterday. On the assumption that everything works as it should, which it will, I would like to congratulate both countries, Israel and Iran, on having the stamina, courage, and intelligence to end what should be called the 12-day war. I wonder if that'll be in textbooks. This is a war that could have gone on for years and destroyed the entire Middle East, but it didn't and never will. God bless Israel, God bless Iran, God bless the Middle East, God bless the United States of America, and God bless the world. Wow. So there was a lot of news going on, and we're kind of back tracing just because, like, I had my notes prepared, and it's ever changing. Like, it doesn't stick to the same plot. The plot's always thickening and changing. So Iran attacked the base in Qatar. They shot missiles at a base in Qatar, a U.S. base in Qatar. And I seen that as like, oh man, is this a sign to escalate? And what ended up happening is the stock market actually ended up rising. So I kind of thought that was weird. And it all turns to what oil was doing, because oil was the big watch here. And what we've seen with oil prices is all day long, they've just kind of dipped a little bit lower and lower and lower. And even till now, lower and lower and lower. Although it seems like Brent crude bottomed out at about $70 a barrel and started shooting back up a little bit. Small moves, not really worthy of a mention, although they have been shooting down for the day. So all of this is super interesting considering everything's going on. Earlier, there were talks that uh, like theories of whether or not oil will enter the realm of triple digits per barrel. Hormuz, the Strait of Hormuz is still open. Trade is flowing. Iran's crude production facilities are untouched. And remember, the Strait of Hormuz is where 20% of oil trade takes place globally. So the main concern was regarding this trade, whether they'd close it or whether they'd do something to implement ploys to stall the trade out a little bit. And we just didn't know what would happen. But it seems like traders were placing their bets, and that's exactly what happened. And because of the price of oil being volatile, Goldman Sachs thought that oil might peak out around $110 per barrel, while others have completely different views about where oil can go per barrel. 110 is high, but imagine like 120, 130, 140. It all just comes down to what actually happens next. And just to mention, OPEC can help out as it holds a lot of spare capacity to help out with the production of oil. And then the U.S. has another trick up its sleeve. It has fracking. Fracking is something we do here in Oklahoma. Oil is a big part of the Oklahoman economy. So because of the hydraulic fracturing, the U.S. net exports about 2.5 barrels per capita and is also the world's largest server of liquefied natural gas. So the world is depending less and less on Iranian oil, but they're still an important player that can move the needle one way or another. And I think that's why everybody was kind of watching this Strait of Hormuz, watching this Middle East conflict that appears to be coming to an end. We don't really know. And who knows, this one could disappear and then we got a new black swan that could come out. And I was talking to somebody earlier and they made a good point that, hey, like a lot of other people get cheap oil from Iran too. So if they were to do something and halt the Strait of Hormuz where all this oil production and trade happens, or if they were to do something to impact oil prices, that could have not just the US and Israel in this past sense, right? Mad at them. It could have a lot of other players out there, including some of these other larger countries like China, like Russia, mad at them for impacting their energy costs. Like, what up, man? Like, we didn't do anything to you, and all of this is impacting us. And then there was question about whether or not there would be some negative energy directed from China, from Russia, from these other countries that buy oil from Iran towards the U.S. because the U.S. is partially part of that. Also, regarding oil costs, Trump came out earlier and said, "Here, let's see if I can find it real. Maybe, maybe not. Ah, here we go, right here. Everyone, keep oil prices down. I'm watching. You're playing right into the hands of the enemy. Don't do it. Don't even think about it. This is right from Trump, urging everybody not to raise the costs of oil. And a lot of people are really suspicious about where we go from here, and especially now, because with the oil prices being so volatile, we don't know if they're going to keep going down now. We don't know if they're going to spike up. A lot of frackers are sus about increasing production because, all right, if oil costs go up a ton per barrel or whatever, yeah, that'll look good. But what if we're in a bubble and then they crash to the downside, and then they've increased this production to such an extent to where now they have to like sell it and it's ready to go, and now they're making less on it because prices have calmed down because this Middle Eastern war has calmed, which is what we're seeing. We can see all of these futures and indexes for WTI crude, Brent crude, natural gas, gasoline, heating oil, WTI Midland, Mars, OPEC. No, well, I guess some of these over here, but this top one though, you see all of these percentage changes are 4%, 8%, 6%, almost a percent, almost 3%, 4, 20, 9%. So futures really dropped on this good news, and it seems like a lot of people were considering that. So a spike in oil prices is still pretty significant. Who knows if that's still a possibility or not? And supply shocks, just to kind of add into that mix, because these inflationary pressures, they hammer the US GDP forecasts, which if you think about the how does oil prices impact GDP forecasts? Well, think about spending for businesses and consumers as far as spending and investment goes. They have less money left over to do that. Now, and as far as the inflationary pressures, let's think about that because I don't know that. And just thinking out loud, what happens to the cost of some of these insurance rates and shipping costs through the Strait of Hormuz right now because they have started going up due to this conflict. And now that the Middle East stuff is just gone, like, do they lower costs again or do they just stay? And that's like a form of inflation. So this backdrop right now really puts the Fed in a weird spot because it sounds like stagflation. Inflationary, this world of headlines regarding recession is no longer the case. It's all now stagflation. And where do we go right now? Like with inflationary pressures and then forecasts of weaker economic growth later on to this year and a Fed that possibly cuts rates, we don't know yet. So let's look at how stocks performed today. And yep, I'd imagine this little spot right here at this little after hours pop in the markets is right when Trump announced the news of the ceasefire. And I'd imagine this just goes into. I want to pull up some of the other ones. Let's pull up the SPY, pull up the Dow. Let's just see how it all is doing. Over here, we could pull up BT, get gold. XY for the dollar. And what are some other ones we could? For sure, I want to look at the VIX. What are some other ones? What are some other good ones? Look at bonds. What the heck? Let's put. Oh wow, the dollar had dropped on that news. Is that at the same time? I can't really tell. Gold's kind of down on it. Bitcoin really popped, but then it's kind of trading down, and stocks all kind of popped. So far it seems like good news, and it's funny because I was watching the market today and how it was trading out, and it started off with a lot of optimism. Like they started off in the red, and everybody's kind of like tiptoeing, like I don't know. Like I don't know. I don't know yet. How are we gonna go today? And then the volatility due to all of the moving pieces didn't seem to reflect much downside rather than optimism that there will be light at the end of the tunnel, and that's exactly what ended up happening. So far stocks are doing pretty good. It's funny because for me, I was trading Microsoft today and I had a put option on Microsoft and it ended up doing pretty good. I had a 40% trade, 50% trade. It was like 49% I made. And what ended up happening is I got out of that one. I took profit. And then I seen it back at the levels. See if I could find it where I got in at. Maybe. I mean, even then, it doesn't really show the move that I got in at. Okay, all right, yeah. So I got in like right here at like 481, if you could see it, and then I sold right here at the bottom of this candle, so it was a nice little pop. And then like I'm doing my thing throughout the day, and then I look at my phone, and then like right here, maybe around like, no, it was probably like closer to 485. I'm like, wow. So let's buy it back. And what ended up happening is it just kept on going up and then it's just kind of stayed here and then this news caused it to pop. So for me, I'm expecting. I held it overnight too because I thought this mess would continue. But I mean, the ceasefire is good news. I don't know that the ceasefire is what Trump wanted, though. Remember, because he said he wanted a complete surrender, and he used the word that yeah, the war is gonna end. We got this ceasefire. I just don't know, man. I don't know. And then maybe this one disappears and something else comes in sight. I don't know why I'm such a bear right now, but with stocks near all time highs, I mean, Microsoft broke a new all time high today. I'm just, I'm the sketch one here. I'm pretty sketch. And I'm hoping my trade comes back to raw. I hate losing. Um, so here, let's put it back on the NASDAQ 100 so we could just look at this chart and just theorize together. So why do we think stocks are still doing pretty good? I mean, yeah, there's some good news. There's something off of this layered cake we've been talking about. Remember the bottom of the cake, the base of the cake. That is still a problem we're facing is inflation, the Fed interest rates being high. Then on top of that, we got the next layer. We got Trump, tariffs, trade deals, tax and spending bill, and what all of that does for the economy. On top of that, we got the forecasts of lower economic data. We're forecasting for this year, later on this year, slower economic spending, slower consumer spending, weakening economic data coming in. We're expecting this, even the Fed's expecting it. And then on top of that, which this piece, the very top of the cake, I guess somebody ate it today because the ceasefire happened, so that mess is gone. But what should we expect later on throughout this year? Well, and just to kind of double back on why I feel like stocks popped today, because the reason I went back and bought that Amazon put, expecting Microsoft put, is because I thought Microsoft would sell back down based on the news that Iran had struck the U.S. base in Qatar. Even though they didn't hit, I thought that was a means of escalation happening. But then you read further into it, and it's like, not really. It's kind of like a fireworks show in a way. So that ended up happening. But yeah, where does that put us? So with this part of the cake, the top part being eaten and the top part of the cake's gone now, we're like down a base. I wouldn't say the economic data's the base of the cake. We might even slide that down to the base of the cake with the Fed and the inflation, which makes sense. That's what they're watching. The labor market. So we're back into the middle piece, which would land us with Trump trade, tariff deals, negotiations, getting along with other countries. Like this is like adults trying to get along together who are kind of power hungry. Like when you're in this position and it's your job, when you're president or a leader of a country, you're in the spotlight and people have expectations of you to live up to, and you don't want to have a trash reputation. So now the second half of the year's predicated on that tax and spending bill, that base part of the cake. And what ends up happening with that, because there's a ton of implications for the deficit and the debt ceiling, which could increase yields. And remember, the yields are the treasury yields, which pay the interest rate for lending money to the government, and they're considered risk free. Anyways, when these yields go higher, that means borrowing costs are higher, which is tougher for consumers and businesses alike. And like just like when there's inflation in oil prices and the cost of filling up the gas tank goes up, the cost of borrowing money goes up, also leaves you with less money to spend in other parts of the economy, whether it's getting a haircut or certain gifts for the holidays, or splurging on certain snacks, or whatever it is, getting that new iPad or buying the new car. All of that plays into those factors and decisions people make. And then on top of that, so the first implication for this continued stock market rising was the tax and spending bill and what it does to yields indirectly. Or I guess directly. The second was earnings for companies, because remember, we talk about this all the time. Earnings rates, or the PE ratio, the expected PE growth ratios for the S&P 500. We're looking at the NASDAQ 100, but the S&P 500 is pretty expensive, so stocks are pretty expensive. Where are we at as far as all-time highs? Oh wow, I didn't even realize it. So look at this. For the Nasdaq 100, it's like squirrel, look the other way. Get distracted. 539 was the last high for the Nasdaq 100. We're at 534. So we're right there within $5 of all-time highs for the Nasdaq. What about the SPY? And this will go into what we're talking about, I promise. We're not going to keep on getting distracted. All right, so 609 SPY's at 600, at least this uh, fund that tracks that index. So yeah, we're right there. We're within literally dollars of all-time highs. So earnings, the valuations for these stocks are already expensive, near all-time highs. With the expectation, like people expect this tax and spending bill to raise the deficit and debt ceiling and increase yields, and who knows where we go from there. That'll be the new oil everybody's watching now that this Middle Eastern conflict's gone. So earnings for companies going to go into play, and if like consumers and businesses are slowing down, that's not going to be a good look for earnings outlook, and people start getting a little weary near all-time highs whether or not these stocks deserve that. And then the hard data that could start coming in negative or really scary and weak. But then again, you never know. So what's some other news we got? Well, I was wondering why this article right here, stocks rise and oil recedes after Iran's retaliation avoids energy infrastructure. And this just kind of goes into what I was talking about earlier. We were kind of talking, like, I was completely confused as to why oil would sell off when there was an attack. But it makes sense. It, like, in the end, it seems to be a ploy. Like, hey, we don't want to escalate, but we got to do something to just kind of like stand up for ourselves or something. I don't know. Maybe I'm reading the room wrong. But one explanation for the sell off was that oil markets have already priced in a high degree of uncertainty about the Middle East. Brent crude oil futures settled at around 77 late Friday, up from 70 before the Israel first struck Iran. The global energy market is also less dependent on Middle East oil than it was during previous conflicts, such as the 1991 Persian Gulf War, with the U.S. now a major energy exporter thanks to the shale revolution. Then, um, where's another one? I thought there was another piece I wanted to. So that one was just kind of talking about it was expected, yada yada yada. Is that all they? I might have mixed up my notes. I thought there were other topics that they explored as to why oil was down. Maybe I'm missing it. Well, yeah. So they're saying people already priced in that oil prices were going to fall and that, hey, it's not a big deal. Just because we were expecting some mess, we were kind of expecting it to get like really bad. Like, think about those projections Goldman Sachs was putting out as to where the price per barrel of oil could end up heading over time, which they said peaking out at about 110. What are we at right now? Like 71? Yeah, like 71 on Brent crude, 71.50 cents. So, I mean, we're not at those levels. We're still at low levels. So as long as nothing else, some black swan doesn't just show up and scare the market off again, seems like things are looking pretty good. And it that I think that's why the market has reacted the way it has to all of the news lately. And it just goes back to show this was a buy the dip scenario. Usually geopolitical risks are buy the dip opportunities. That's exactly what we ended up seeing. Now, like I said, we don't know if another black swan's going to show up and scare everybody away, or if it's the data, or the second half of the year's new watch, which is the middle part of that cake, the tax and spending bill and earnings and hard data. We don't know where we're going to go from there, but we can only guess, right? Now, there was some good news because Michelle Bowman, let's see if I could find the piece on her. I'm sure if we just Google her, it's going to come up. But Fed Vice Chair Michelle Bowman came out and that what she revealed is that she supports cuts for interest cuts for July's meeting as long as inflation continues to ease. Now, come back and let's think about that last part. You got to like slide that in. She's like, yeah, I support cutting as long as inflation continues to come down. Okay. Well, I think we got a few more inflation reports to watch, and a lot of people are expecting inflation to start surging due to tariffs, that tariff impact. So it's almost like she's telling us what we want to hear, but in a way to where like she slides that little end part in there, and it kind of like tells us like it ain't gonna happen because a lot of people are expecting these tariff um inflationary pressures to start kicking in these future inflation reads. So it sounds like a spout of positivity, but I'd imagine though that July is still off the table for the next rate cut. But like I said, it gives the it perceives there's light at the end of the tunnel. Let's see where we're at. See if this even moves. Oh, okay. So yeah, the odds of a rate cut in July 30th's meeting. So it's even the end of July. So yeah, we still got some data we're gonna see between now and then. The odds of staying the same are still around 80%. The odds of them cutting by a quarter went up to 20%. So I'd imagine it on the next inflation read, assuming that the tariffs start showing up in the inflation data, this will just go back to the default, probably back to the 90, 10%, the 90% stay, 10% cut a quarter. Looks like September still unmoved, 67%. All right, so yeah, this really isn't moved, but I just thought it was interesting, and I was thinking about Michelle Bowman coming out and saying she supports the rate cut for July, assuming the inflation data continues to ease. Which, if you've been reading any of the articles, watching any of my videos, we've covered many people expecting, including Fed numbers, including analysts, including tons of news articles and press releases and um, it's just endless of them expecting these Trump tariffs to eventually show up in the data. And like, it's not whether it'll happen, it's how long will it subside. Will it be like a one-off kind of deal, or will it kind of be sticky and show up in multiple inflation reports and make the Fed's job a little harder to gauge out? Now, what else do we got? Consumers inflation. So businesses face rising inflation due to tariffs. Will consumers get hit next? Over here by Jeffrey Bartash. The S&P surveys show an economy that's weaker but still growing. So let's dig this one apart. So the cost of doing business for U.S. companies rose in June at the second fastest pace in 2.5 years. A pair of S&P surveys have showed, reflecting ongoing inflationary pressures tied to Trump's administration tariffs. The big question is whether rising costs get passed along to consumers. And then they mentioned some companies like Amazon, Best Buy, Home Depot, and other retailers where that could show as evident. Companies in the huge U.S. services sector, for instance, could not raise prices to fully offset their own costs because of more intense competition, the survey has found. The S&P Global Flash U.S. Services Sector Index slipped to a 2-month low of 53.1 in June from 53.7 in the prior month. The services side of the economy employs most Americans. The S&P Global U.S. Manufacturing Survey Index, meanwhile, was unchanged at 52. So as long as these numbers are over 50, that is signs of growing. Once it comes under 50, that's signs of contracting. So above 50, that's good. Some manufacturers, such as steel producers, are seeing benefits from tariffs, and other companies get a temporary boost in new orders as customers try to front run future price increases. And then we just talked about this. Any number over 50 signals the U.S. economy expanding, but the details of the S&P report were less encouraging. What they show is an economy that, while still is growing, has lost momentum since the end of last year. And let's pause right there and like think about this. At the base of the cake that we keep talking about is the Fed interest rates and the hard data. And with that, interest rates, when the Fed had raised interest rates to declare their fight on inflation and try to get inflation to come down, what ended up happening at that point is that the borrowing costs got higher for a lot of people in the economy. But there's something to consider there. is that whenever interest rates go higher or go lower, that doesn't immediately impact the economy because it takes a while for it to feed through. Think about it. When they raised interest rates, everybody was like, y'all, like interest rates are higher. Let's go like buy a new house, or let's go max out our credit cards, or let's go buy a new car. Like it takes time for, and a lot of people don't even think in terms of, oh, I better wait, interest rates are a little higher. Just that things happen in life and things come up. So it takes a while for businesses and consumers to finally feel the effects of those higher interest rates just because of those reasons. Everybody doesn't go out and buy a new car at once. Everybody doesn't go out and apply for a loan. So that would lead to some people, like even now, right now, those ultra low interest rates we had during the pandemic, some people still have that. They're unaffected by these high interest rates that we have right now. And remember, some people think that we're just the last decade of interest rates, especially for 30-year fixed rate mortgages, we were just spoiled and got used to artificially low interest rates that probably won't ever happen again in history. We could argue about whether or not that's going to happen. That's aside this video, but I just wanted to point that out, is that it takes a while for the economy to start feeling that. And I kind of feel like that's what they were saying, that what the what this survey showed is that while the economy is still growing, it has lost momentum, and that leads into, after interest rates being high for so long, they're finally starting to actually kick in like broadly along the market. And then on top of that, throw in tariffs, which aren't going to have an immediate impact either. Those take a while to kick in. So I digress. I just wanted to point that part out. Now, some of the details: new orders rose, and manufacturers posted their biggest increase in production since February, the last month before widespread tariffs began to kick in. Virtually every company reported rising costs. Price pressures rose sharply across both manufacturing and service sectors during June. Employment held steady and, in some cases, even rose, in a positive sign for the economy. U.S. tariffs are now higher than any time since World War II, even after the White House sharply reduced them from initial levels. The path of the economy is likely to depend on whether the U.S. strikes new trade deals that ease the burden on businesses. The biggest threat to the economy could be another burst of inflation, at least temporarily, if high tariffs remain in place. All right, so the biggest threat to the economy could be another burst of inflation, and that goes back to the stock market and what we're going to be watching for the second half of this year, which is the tax and spending bill, which is expected to do two things: increase government spending and increase the deficit. Yeah, they're going to generate the tariffs, which also increase inflation, or at least inflation expectations. So what that does is two things in one: it increases inflation expectations, so in a way increases inflation, and increases borrowing costs. So let's go back to this little piece we were just looking at. That the biggest threat to the economy could be another burst of inflation. Just going to highlight that and leave that there. So if the government's going to go spend a ton of money, and that's kind of a form of inflation, right? Artificially. And then, like, it's not called inflation, but when financing costs go up, that's an increase in costs. So the path of the economy is likely to depend on whether the U.S. strikes new trade deals that ease the burden on businesses. And then they mention this threat. So I don't know how these trade deals are going to go. So far, I mean, we haven't really heard much news on them lately. But do these tariffs just go completely away? Because I mean, I thought Trump built them into his tax and spending bill idea, and the whole thing was built on tariff revenue and everything. So we're just going to keep watching this one closely and just kind of go from there. There's a lot of thoughts going through my mind right now about this one, but we don't have 400 hours for this one video, Joel. So looking ahead, the U.S. economy has continued to grow at the end of the second quarter, but the outlook remains uncertain while inflationary pressures have risen sharply in the past 2 months. It hasn't really been shown up in the data, though. If anything, well, I guess the inflationary pressures have risen, but inflationary data hasn't really showed up yet. So yeah, that's what we got as far as the this survey goes. I thought it was interesting while I was reading it. Why is this breaking right now? Shipping costs through the Strait of Hormuz are up. What if Iran closes it off? Why would they? Here, we're gonna get into U.S. home sales data here in a bit. When was this one? All right, so this was an hour ago. So yeah, this one wouldn't be as relevant. So let's get into the last piece we're going to talk about today. So this next one is U.S. home sales beat expectations but remain low. And this is by Nicole Friedman. Sales of existing homes rose slightly in May but held near historical low levels, the latest sign that buyers are staying away because of high home prices. And remember, this is a two-leg stool: high home prices, high borrowing costs. Sale of previously owned homes rose 0.8% in May from the prior month, the National Association of Realtors said. That was better than the 1.3% fall expected by economists. The data is seasonally adjusted. So they were expecting a fall of about a percent, and they actually rose by about a percent. So I suppose that's good news. Sales were still subdued, coming in at a seasonally adjusted annual rate of 4.03 million. That is the slowest pace for any May since 2009. Wow. The May data largely reflected purchase decisions made in March and April, as homes typically go under contract a month or two before the contract closes. News Corp, an owner of the Wall Street Journal, also operates Realtor.com under license from NAR. So, y'all, that's what we got today. A lot of just mess and jargon and more uncertainty. I honestly don't know where we're going to go. I personally, I think there's still I don't think we're out of this hot water yet. I feel like something could still come up and spook us from where we're at, and I don't know what it's going to be. I don't know if it's going to be these trade deals or another conflict, or maybe somebody doesn't live up to their side of the bargain, or a broader stock market crash. I don't know what it is, but with stocks near all-time highs, considering this cake that we got, all of these problems, because before, and I wish I could stand at a mountain and just remind everybody, before any of this, before November when Trump was elected as president, everybody was worried about a recession due to only the Federal Reserve having these high interest rates. I remember just listening to all the YouTubers and reading all the news articles. Recession is a recession next? Like, are we going into a recession? Like, the economy can't breathe. These rates are too high. And now we've gotten like that's still there. That's why I keep calling this a cake. All of that is still there. There's just stuff layered on top of it to like distract everybody from it. So I don't know how. I don't know how. Here, let's go back to it. Let's put it here while we talk about it. I don't know how this is possible. Why are stocks near all-time highs yet again? They were worried about a stock market sell-off before all of this was a mess. And it's like, all right, there's a war, now there's not a war. Let's buy the dip. All right, there's tariff wars and trade deal differences, and countries are starting to get heated towards one another. Buy the dip. Tax and spending bill, inflation inducing, high yields, borrowing costs even going higher. Buy the dip. And this is all after everybody was concerned that the Fed isn't cutting rates yet, and that it's going to start showing up in the economic data, that hard data we were talking about. And stocks are very expensive right now. So where do we go? Like, if we blast out, let's make this chart a little bit smaller. Like, do we shoot all the way up and go to like 700 on the QQQ? Or do we go down to like 300 somehow? Like, honestly, we have no idea where we're going. But I just remember, because I think about this every single day, and this is the reason I do these videos, so like I could get a stronger understanding. They say the best student is the teacher, and I'm not necessarily a teacher here, but I'm learning and I'm presenting my findings each and every day about what's going on in this macro economy to help me become a better investor and adopt the mindset required to continue to grow into this industry. And it just doesn't make sense because it's like I'm the only one aware that all of this stuff is going on. Like everybody's cheering. It's like everybody's like partying over here, and I'm like the weird guy, literally sitting in the room, literally right now sitting in the room, like scared about something. And I just don't get it because, like I said, before any of this other mess, all of this other uncertainty, it was just the Fed, inflation, and interest rates being the problem. And man, since then there's just been so many additional additions added on top of that. And everybody's just distracted. I'm like shaking them. Hey, whatever happened to the first thing? We're like 20 down that list now. What about that? And everybody's like, ah, fam, buy the dip. All in. Margin. I don't get it. But we're going to keep on reporting what happens each and every day. This video is a little harder to talk about just because, like, man, like I said, I don't get it. So, maybe we'll understand one of these days, but right now is not one of these days. Y'all, have a good one. Appreciate you hanging out with me, all the people out there, and I'll be back.